Welcome everyone to this trading beginner guide. Today I'm going to teach you the basics of trading. What's trading, the types of orders, the types of markets, the types of prop firms, everything. Let's begin. And start with what is trading about? This is a simple question that some people don't know the answer to. So what is trading? So trading is buying cheap and sell at higher prices. You buy, for example, 100 units. Let me change the color to something else, to maybe orange. So you buy 100 units of $1. So you buy at this price. So you have $100 of this product, instrument, or whatever. It could be, let's say, it is cotton. Like you go to a market and you buy cotton, or it could be wheat, or it could be, let's say, something stupid. It could be eggs. So you buy at here 100 units for $1. So each egg is $1 and you buy 100. So 100 eggs. So when price rises and reach to $2, you sell your eggs. So you have 100 eggs, but the price now is $2. So now you're selling for 200. So you bought for 100 and you sold for 200, which gives you a profit of 100. This is simple. So in here we have candles. We are going to explain what candles are. And in here we have the time. So in trading, either you sell at profit, or if price goes down, you sell at loss. Great. But you can also do the opposite. What I'm saying is we have two types of buying. You can buy long or you can sell short. We say buy short or sell short. Depends. You can buy short. Let's say buy short to simplify the idea. So when you buy long, it's the exact example of what we saw earlier. So you buy here long. If price goes up, you are in profit because you sell at profit. If price goes down, you are at loss. So you sell at loss because you bought your eggs for $1, for example, and now it's just 50 cents. Meaning you are losing. So instead of having $100, it became $50, meaning you lost $50. If price went up, it will become $200 if you sell at $2 of price. Great. Now we have short. This is something that beginners struggle to get at first, and we are going to explain it very easily. So instead of buying then selling, you are selling then buying. Yes, you are selling then buying. And don't worry about that. Just remember that when you short, if price goes up, it's the opposite, you lose, and price goes down, you are profiting. Let's get an example. So let's say you are shorting at $2. If price goes up to 4, and if price goes down to 1, for example. Let's do here 3 to simplify. So if price goes down, so you had here $200 for 100 units. If it goes down, it's $100 now. Great. If it goes up, it's now $300. But remember, we are selling then buying. So you would have sold here and bought here, meaning you bought to 100 and you sold 200, meaning you profit. If price goes up, you buy at 300 and you sell at 200, which means you lost money. So in short, it's just the opposite of buy. of long, sorry. So price goes up, you profit, price goes down, you loss on long, and on short, price goes up, you lose, and if price goes down, you are profiting. So let's move on to now what is a candle. So a candle, so this is a candle going up and a candle going down. We can see it here, for example. So we have here candles going up and candles going down. Great. So what is a candle? So a candle represents a unit of time. So let's just explain what the candles shows, then we are going to explain the time element. So when price goes up, so this is the up candle, it opens down, so it opened here, time went on, and it closed above. So in here it started, and in here it ended. That's why it's an up candle, because the open is below the close, meaning we closed above the open price. Here in a down candle, we opened upwards and we closed below the open. So price opened here, so price was here, then it went down and it closed here, for example. So the parts of the candle are the wick and the body. The body is this rectangular shape and the wick is those lines. So the body is what is between the open and the close, and anything that price did outside that range are becoming wicks. Okay, we're going now to see time frames. So each candle represents a fixed amount of time. So that candle, for example, can represent a day, for example, a whole day, 24 hours. Great. That's what we call a time frame. So when we choose a time frame, so here we have 1 minute, 5 minutes, 30 minutes, 1 hour daily. We can, each candle is 5 minutes, for example, if you choose 5 minutes. Or each candle is a day if you choose the day. So let's see the chart and just explain it there. So here above, if you can see, we have selected the 5 minutes. So each candle represents 5 minutes. Great. So let's just choose, go to the day. So let's choose this candle. So it started here, it ended here. So the price opened above here, then closed here, and price went up and went down. So let's go to the 5 minutes just to see inside that candle. So here is what happened during all of this candle. So it opened at this line, price went up, then down, then down, then it closed here. So from the open to the close it's here, and anything above or below are wicks. So this is a wick here and a wick here. So it would be exactly like here. So this is the candle. So let's see the type of traders based on holding time and time frame use. So it depends on what time frame you use and how much time you are holding your trades, meaning you buy and you hold until you're selling. So you have scalp traders. Scalp traders holding trades for only seconds or minutes. So they are holding and exiting really quick. Normally, they use a time frame of 1 minute or sometimes 5 minutes, and some even in seconds, but this is really rare. You have swing traders, which is, let's go to day traders first. So day traders holding trades for up to a full day. Normally they are using a 5 minutes to a 30 minutes, even sometimes 1 hour time frame. Swing traders are holding trades for multiple days or weeks. So normally they choose a time frame of 4 hours to a day. Position traders, those are like investors in a way. They hold trades for several weeks, months, or years. Normally they trade based on the daily. Each candle is 1 day, or the weekly, 1 week. Each candle is 1 week. The word that you heard mostly is day traders, which are holding trades for up to a full day. Normally, the scalpers and the day traders are a little bit the same.